So this is the pound dollar analysis for Friday the 3rd of November. Now, we did have the interest rate decision in regards to the Bank of England, and as we can see here on the chart, it's pretty clear by this large bearish candle that it was a hawkish rate hike, but well, it wasn't a hawkish, it was a dovish rate hike. We did have the increase in interest rates, which the markets anticipated, but we had a move counter to what many might expect in terms of expecting the pound to strengthen. Instead, we saw the pound weaken somewhat. I did mention in yesterday's analysis that we might see a counter trend move, and that's what we actually saw. The market seemed to have priced in the rate hike, and also it might have just been a case of the major market players taking profit of this rate hike and so on. But listening to the Mark Carney statements and so on, and he did seem a bit he did seem quite dovish. He did seem to be it seems policy is going to be predicated on the what actually happens in negotiations in regards to Brexit. So he did mention Brexit quite a few times in the subsequent press conference after the rate hike. So Brexit negotiations seem to going to be the Brexit negotiation, and possibly coupled with inflation will be the drivers of monetary policy for the Bank of England. So let's just have a quick look what happened on the 2nd of November. So just going to grab the pen. So on the 2nd of November, we actually saw selling momentum come into the market from this technical level, this very strong level at 32.81. Like I said, in yesterday's analysis, I did say we could potentially see a bit of a head and shoulders pattern, and that's what we actually saw, and a breakdown in prices. So we did come up to this 32.81, and we see some selling momentum as I expected from yesterday's video, as indicated by this bearish candle here with the black triangle above it. We did see the selling momentum coming to the market, pretty strong selling momentum, surprisingly enough, considering that we were waiting for a news event, but somewhat seems like market players preempted it. And we've had strong candles to the downside, closing near their lows, and this large candle here is pretty much your interest rate decision and the subsequent press conference which followed after. The interest rate decision was at 12, the press conference was at 12:30. So we did see a follow through. We had a spike up. We didn't clear these highs. We didn't even test 32.81, which is surprising. Normally we test strong levels and possibly sell off. So what we saw was we did see the sell off from pretty strong sell off on the news event. We came down to this 30.93, had a brief little pullback there, but we've seen follow through now. So the next logical level we'll be looking for prices is in and around the 130.27. Let's see how prices react around 130.27. It's a very minor level, so we wouldn't expect much there. So we're looking for this one. See how price reacts now. The very next major level is the psychological number of 130. And we're looking at also, actually it's 1.30, isn't it? 130. So we're looking at 130 and 129.83. So in and around this zone here, we're looking for possible dead cat bounce by momentum in the market. We may not retrace all the way back up to this 30.93, but in light of the strength of the move to the downside, a retracement before we get continuation is all the more likely. Now, if we do not, we might see the retracement before we get all the way down to this 30 or this 29.83. So we might see the retracement from where we are at present. We might go into a bit of consolidation before we start to go up. Test is 30.93, from which we could sell off all the way down to 29.83, or we might retrace even further to say 30.47, which we then would expect the sell off all the way back down to say this 30 or 29.83. As we have had as the Bank of England has outlined their policy, we have to look at and the market has pretty much taken it as being a bearish signal. We have to look at further downside targets below at 29.83. So the very next level after which we'll be looking at in and around is 28.80. 28.80, we don't anticipate getting all the way down to 28.80. Actually, saying that, we do have non-farm payrolls. So unless there is something very pretty surprising, which is bullish dollar, I wouldn't anticipate price getting all the way down to 28.80. But it's the very next level we'll be looking at if we do break below 29.83, and level below that we'll be looking at 27.74 for potential bounce. So a bounce at 27.74 and 28.80, possibly to the next level, before we might see a breakdown in prices to the downside. So we're just going to have a look at the weekly, then the daily time frame to just wrap up here. So we're just going to go over to the weekly chart and see where we are. So over to the weekly chart, just get the scale on here correct. As we can see here, we did say we were concerned about the deepness of the retracements, and it seems our concerns were not unfounded. We've had of the past 7 weeks, we look poised to finish this week bearish. So over the past 7 weeks, we've had bearish closes to the weeks. We do appear to be the 20-period moving average doesn't appear to be holding at the moment. So we do look poised to close below 20-period moving average, which will be the first time in quite a while now. 20-period moving average is actually sitting at, let's bear with me a second here while I get in the charts. 20-period moving average currently sitting at in around this 30.98, so we're we're about 50 or so, well 40 or so pips below that at the moment. But due to the, as you can see, this large wick to the upside, the bulls were unable to keep control of the market. We had the Bank of England dovish rate decision, so we do appear to be heading towards the downside. So very next target, we've got this a bit of a swing here on this weekly chart in and around that. Where is that swing actually? So just make sure this swing, I do get the numbers here correct. So actually I've got the, let's just see where we are. Let's just see. So there is a swing 27.74. So in around that's 27.74. We did have a swing all the way down there. That seems to be the next major level, but we have to be aware of in and around this 130, 128.80 before we get down to this 127.74. Now we're going to look at our daily time frame before just wrapping up here quickly. So on this daily time frame, we did seem to have put in a bit of a bearish engulfing candle. We're just going to grab the pen quickly. So this is our candle from the day of the 2nd, was it? Let's bear me. Yeah, I think it was the 2nd. Yeah, it should be the 2nd. Let's just grab the pen. So we did have this bearish engulfing candle, just formed just there. We are coming down to this level just there, where we have seen some buy momentum come into the market. So that might be the area where we'll see the dead cat bounce before we see further selling. We might see some brief buy momentum before we see further selling momentum in the market. So let's just see where. Let's just see. Nope, not changing that. Okay, let's just see where these swing lows are. Just bear with me a second here. So these swing lows were in around at 30.27. I've already mentioned that. So 30.27, we might see, that might be the area where we see the dead cat bounce before we possibly test this 30.93, above which 31.47. I can't anticipate price against, you must be on 31.47 on retracement of the pound against the dollar. We do have obviously the NFP, which is a highly volatile event. If it is surprising either way, we could see prices really start to trend downwards on the pound, or if we do get a retracement up to possibly 31.47 before we see further selling momentum coming back into the market. The last NFP was surprisingly bearish, pretty weak. So if we do make consensus or better than consensus, which we expect, we should see further selling momentum and a follow through of the pound against the US dollar. So as we can see here, I'm just going to just wrap this all up a bit quick. So we came up to that 32.81. As you can see, we've stalled there several times, and we've finally had a breakdown on the fundamental catalyst. We had our highs up here. We didn't revisit the highs, and in and around that, so 32.81. Again, we've sold off from there several times. We weren't able to break it. We've sold off, and now we've got the fundamental news catalyst. So we could potentially, we've mentioned that level there in around 27.74. We do have a few levels before we get all the way down there, but that does seem to be a very key swing before we could possibly see a strong move to the upside. So that should wrap up the pound dollar analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.